In tonight's Dollars and Cents, the tax filing deadline is next week. New IRS changes regarding popular payment apps like Venmo and PayPal could affect you this tax season. If you use these apps, you may owe taxes this year. An Elk Grove-based tax expert explains what's new and which kinds of payments are involved. This tax season, the IRS is shaking up the rules for how you report income from payment apps like Venmo and PayPal.
The IRS has decided to require third parties that have payment collectors to issue these 1099-Ks when the volume of transactions reach certain thresholds.
Payment apps are now required to send tax information to the IRS, and the new rule is being phased in over the next few years. According to the IRS, for 2024, businesses and workers are required to report income from these apps of $5,000 or more. In 2025, the threshold will drop to $2,500. And then in 2026, the threshold will drop again to $600. So, if you got income through a payment app in 2024, you could receive a 1099 tax form and would need to report that when you file your taxes in 2025. This tax form will also be sent to the IRS. Keep in mind, each payment app has its own system for categorizing business transactions versus personal transactions.
On those platforms, usually you can set a flag to indicate whether it's a business transaction versus a personal. And if it's all personal, those rules of reporting the 1099-K do not apply.
Meaning, not every third-party payment app transaction will be reported to the IRS.
A common one I've been seeing is, people that are selling their items, personal items on eBay.
Ching says personal transactions will not be reported as long as they are labeled correctly.
When you're selling personal items, more often than not, you're selling items that you've owned for a long time that you purchased for a higher value. And so in that circumstance, you're selling something basically at a loss. But the fact that it's a personal item, it becomes non-reportable.
Here's what that additional income tax form looks like. Just enter the amount for your personal items sold at a loss in the area highlighted in yellow. Here are some examples of personal transactions. A few friends are using a payment app to split the cost of a pizza. A few roommates are using an app to split the cost of rent for the month. Or family members are paying each other back for a holiday gift they purchased together.
Is there a difference when you are paying through these apps versus receiving payment through these apps?
The 1099-K is going to the receiver. You just want to make sure that the people that are sending you those funds, that they're checking it appropriately also.
Experts warn there is a good chance mistakes will be made in these first few years, so payment app users should check their records just to be safe. However, if the payments are truly income from a one-time job or a side hustle, then the recipient must report the income to the IRS.
Does this add another complication to filing?
Just releasing this information to the public, once they're aware of how simple it is to deal with, then it would just make that nervousness go away.
Experts say if you ignore your 1099-K forms, you'll likely get a letter from the IRS asking for more information. If this letter is ignored, the IRS might add the amount listed on the form to your total income for the year, which would likely increase the amount of taxes you owe. I've got more tax season advice for you streaming now on the ABC 10 Plus TV streaming app. The app is free to download on your TV. You can also email me your questions at lpainter@abc10.com.